Hi, everyone. This is Jason Burack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. I like to bring him on for updates on the gold and silver market whenever there's important news stories that have been happening in the last week or two. There's been some very interesting gold and silver news stories coming out. He's been in the precious metal industry for over a decade. Initially, I think he was the sales director for Michael Maloney over at goldandsilver.com. He's been working with silver doctors for a while now, I think for a number of years now. He's in charge of their content, especially making their YouTube videos with their weekly metals and markets wrap, a lot of precious metal news stories. James Anderson, thank you for joining me again.
Jason Burack, really cool to be with you. Real quick correction. Silver Doctors is a separate entity. I'm with SDBullion.com. So it's totally separate. I do the work for SDBullion.com. A lot of times on YouTube, if you're a big time YouTube, gold and silver guy, just look up SD Bullion on YouTube and I make those weekly market updates just to give your listeners a heads up.
Yeah, and SD Bullion is the bullion dealer portion of Silver Doctors, which Silver Doctors was with the news story. So SD Bullion is actually a pretty low-cost bullion dealer online.
Cool. Well, Jason, I'm very excited to be here. Thanks for having me.
So before we talk about gold and silver, some of the news stories and the gold prices, the paper gold price in US dollars just dropped below $1,700. I think the silver. Yeah, we're recording this on Wednesday night, July 20th, 2022 for our listeners out there. So we just had another paper price smash. The current events that are happening, the global macro conditions. What are your thoughts on what's going on with the global macro conditions right now?
I mean, we talked a bit in the pre-interview, just a little bit of discussion, maybe 30 minutes of talking and sharing notes together. Because whenever me and you get together, it's always mind-bending, because we hear a whole bunch of things from different places, and we compare notes, and it's usually it's pretty crazy. It's just usually one of those things where it's like, wow, I can't believe that. It's interesting. It confirms everything I was thinking. For the most part, it's confirmation bias, but there's times too where I get blown away by things I didn't think were happening, or there's new stuff. So yeah, so what's happening? We have gold spot at 1692, an absolute bludgeoning this summer. And last week on SD Bullion YouTube channel, I tried to explain to people who were painfully out there thinking that gold is going to go up, moon tomorrow, people who have this short-term time horizon. No, it's not. This is not a short-term bet. If you're into precious metals and you think it should be mooning because the, inflation's 9%, I don't think you get the big picture. It's just because inflation's maybe mid-teens in reality, that's nothing. They have to write off hundreds of trillions of dollars in nominal debt. We have to have massive inflation for decades. I mean, if they're going to try and control it, if they want, they can just do a hyperinflation craziness at some point. They're not going to do that until they have the CBDC systems set up. So we got some time, but
well, James, yeah, the new narrative now, James, that's going around with the global macro people, these supposed experts that missed stagflation for the last 2 years, and we're calling tops in inflation every single week, it seems like, for the last 2.5 years, wow, is that there's deflation now. Inflation's over. Inflation has peaked. It's only deflation we have to worry about because commodities futures prices, and it's not just gold and silver that are getting smashed. It's, base metals have crashed enormously. Agricultural prices have crashed enormously the last 2 or 3 months. Oil and energy prices, especially natural gas, coal prices, oil prices are still relatively high. Energy is holding up pretty well. But pretty much other than that, almost all the commodities complex futures contracts have gotten absolutely taken to the woodshed the last couple months.
Yeah, that's cool. I cut my teeth in the fall of 2008, and I saw spot prices just vanish, south. $1,000 gold went to 700 or below. Silver 21 ran to fucking 8, high 8, 9, low 9s. Sorry to use such language, but I'm just, I literally on the trading desk, I had to deal with people who are literally calling me on a retail front, afraid that their bank's going to collapse, right? And they just want any bullion, okay? They don't care. They just need something to store value because that's how scared they are. And that my teeth cutting in that. And, you know, that's literally how I learned about this trade. It was trial by fire. I had literally no training. I was just on the job, like on the phone, like Mike was just like, hey man, you know, grab a seat and let's go. You know, like it was that busy. You know, I don't blame him for that. It was just busy.
Well, I mean, the demand for physical silver here in the United States and other countries is still really strong. I mean, the premiums haven't collapsed yet for physical coins and bars, right? For silver.
It won't. No, it won't. I mean, remember in 2008, if you can go to the Wayback Machine. If you think I'm just lying and making up stuff, that's fine. But go back, use the waybackmachine.org and go look at tolving.com. Tolving.com is probably the easiest way you can figure out premiums, or Northwest Territorial Mint. Try that one.
Or Bullion Direct. They went bankrupt too. There's a long list of bullion dealers that didn't make it.
Yeah, that's an inside joke, Jason. That was awesome. Yeah, so all these bullion dealers went bankrupt for various reasons, but you know, we had this massive spread. I mean, the spot price at 700, but I was selling physical gold at $900 an ounce. I mean, there was a woman I remember selling a kilo of gold to at 900 an ounce. I felt bad. The fact that she wanted that kilo of gold. And I'm like, man, that's a huge spread. Like, but she wanted it. And probably to this day, she probably still has it, you know, and probably feels fine. You know, $1,700 gold. She's got her, you know, $900 entry point in that kilo. And that's probably a rock in her portfolio. It's somewhere in her home or wherever it is. So, yeah. So look, we could go down to, I mean, if things get absolute insanity, if we have a GFC part deuce, right, which I think is going to happen at some point, I don't know when, but man, we've talked about it a little bit already. The conditions are ripe. I mean, you have China, like literally like looking terrible. We talked about it earlier, like the real estate market there is the biggest asset class in the world and it's falling apart. Credit Suisse in Europe looks like absolute trash. All you have to do is have one globally systematic, important bank fail. And then the counterparties, all of a sudden, they either take it on because they're the first winners in the bets that they made. And the people that are at these banks, you know, good luck getting bailed out. Like, good luck. Hopefully you have some insurance, you know, or maybe you'll get some shares in the next zombie bank they create. Like, we could literally be walking into right now the absolute worst part of the second half of the global financial crisis, which is not yet played out.
Or the euro could potentially collapse because they're running these absolutely enormous trade deficits now. You have German manufacturers, they can't compete because their energy imports, their electricity costs are through the roof. So these German manufacturers are going to shut down. Germany was an export powerhouse, but because of these ESG policies, bad energy policies compounded on each other. I mean, if the European Union keeps importing super high energy prices, they're running enormous trade deficits, their currency is in peril. I interviewed Doomberg last week, and Doomberg said potentially if Germany leaves the euro in order to get better energy deals with Russia, that would collapse the euro. So you could potentially have that. I'm not saying it's guaranteed or anything, but you have these countries that all of these economies, whether it was Japan, the European Union, were all designed on cheap currency, cheap energy. And now that they're having to import very high energy, now they're manufacturers or consumers. Everyone's just getting killed across the board because of this global food and energy crisis too.
Long term, that's not going to stop. Like we are walking into decades of expensive energy. You know, people are going to finally figure out the fact that you just can't put 9 entry points into a keyboard and it's all good. No, it's not all good, man.
Everyone can't have an electric vehicle then? Where does electricity generation come from? You just plug it. The electricity is created by Keebler elves or unicorns.
No, it's not all good. Like, no, it's not going to work. Like, people are going to finally figure out that they have to be sovereign. You know, they're going to have to actually own and have like local control of things. You know, if you're like a billionaire, you know, you better damn well have your, you know, local sovereignty. You better. That's where we're headed, I think, ultimately, long term, is that, you know, unless there's some hyperinflation that happens and these people's, you know, ridiculous wealth gets wiped away.
Well, we're at silver prices now below 19. And if silver prices keep heading down, James, it's going to get very, very ugly for these primary silver miners, even the byproduct silver guys, because a lot of those guys are base metal miners for copper and others. Copper is taking on the chin too. So if we have a further collapse in base metal prices, silver prices, the supply problems, and we're seeing it isn't the premiums indicate tightness in the market and supply problems. The premiums could get even worse if silver prices fall further.
Oh yeah. I mean, spot could go down to like low teens, right? And there's a lot of like naysayers who are like, we'll go back to 9 or 8, like it's the 2008 GFC. Yeah, okay, that's fine. Spot could say 8, right? But like bullion's going to be 30, 40 at that point. Like, are you kidding me?
What did the premiums get to in 2008 and 2009? Didn't the premiums get like $9-10 an ounce at one point?
Yeah, on wholesale level. Like I'd be calling desks that were the literal distribution centers of the US Mint and be getting bids of like 8-9 over spot for whatever they had on the shelf. It was probably limited, and they're trying to rake as much as they could for what they had.
It was worse than that on eBay. I think it was $12 an ounce.
Oh, dude, it got absolute gouging. I mean, you're talking 20s per ounce when spot's 9. You know, it's
wow.
If you knew what you were doing, you could get it.
David Morgan. Do you remember David Morgan? He was buying He was buying 1,000-ounce silver bars, and he had contacts in the refinery business. So he was buying 1,000-ounce bars and then getting them turned into silver rounds and smaller silver bars, and he was making all those premiums.
Yeah, no, I mean, if you knew what you were doing on the wholesale level, on the refining level, you could literally have been printing big time money, because if you had a mint or a refinery, you know, and you could crank it out into smaller levels, you could make huge spreads, and that's just the way it goes. Like when the spot price gets so stupid and ridiculous, you know, everybody's shelves go barren, and then, you know, who's coming with more product? Oh, the mints. And they're the most dysfunctional things of all time. I mean, you've seen the way the US Mint works. You've seen like how in 2010, they changed the rules of the 1986 original law. In 2010, they changed it so that the US Treasurer, the person in charge of the US Treasury, can just say what's enough for public demand. So now literally Janet Yellen can just say, yeah, that's enough silver eagles. That's enough.
Well, don't they shut down? They shut down the mint before Thanksgiving, right? So they don't even run the mint no matter what demand. So this is not a private business that responds to increased amount of demand with increased supply. They shut down. They shut down the mint?
This is not the original. This is not the original spirit that Ron Paul spearheaded in the early 1980s. He spearheaded this 1986 law that came into effect, that literally allowed U.S. citizens to buy bullion that was U.S. certified legal tender. But they watered it down in 2010 because it couldn't keep up with demand. They just couldn't keep up. They were dysfunctional, whatever. They just needed to come up with new wordage. And the new wordage used to be, originally it was U.S. Mint makes these bullion coins, you know, to keep up with public demand. And they reworded it to, you know, the treasurer can deem what is public demand. Like essentially the treasurer by fiat can claim that's enough.
The U.S. Mint has run at the efficiency of probably worse even than the Department of Motor Vehicles. I mean, it's like any other government agency at this point. So it's waste, fraud, corruption, and abuse. A lot of the employees that are at the Mint don't even have the right skills or expertise. They don't know anything about, you know, why people invest in gold and silver. So they just hire. It's a nepotism. It's a spoil system. It's who you know that gets you jobs.
It's a sad dysfunctional unit of our country. And if you really study it and you look at the numbers behind the copper nickel coins they create, those are all done at a loss. And eventually they're going to go disappear, just like they did in Argentina. You know, eventually black markets, gray markets are going to melt those things, offshore them, melt them, whatever. There's going to be huge smuggling of from copper nickel, you know, from copper pennies, the kind that pre-1982 people hoard, and they've been hoarding for decades, to like now the zinc pennies, almost 1 cent melt. Like wait till, like, you know, if you have copper and zinc running up, like zinc prices, when they run up, like literally now the actual substitution coin that they used in 1982, this zinc penny, it's like this copper glazed zinc piece of trash. It's almost worth 1 cent in melt already. Like that's how bad it is. So yeah, you're going to lose coinage. And the only reason that the U.S. Mint makes any money is because they sell all these ridiculous bullion products at massive seigniorage. That's the only way they can break even. They make a little bit of money actually. So, so it's this weird, ironic situation where the people that are most afraid about the debasement of their damn coinage are the ones propping up this ridiculous mint. You know, I mean, it's an absolute ironic embarrassment.
So for our listeners out there who aren't familiar with buying physical gold and silver, what should they be looking for then with the premiums? What type of signal or indicator do the premiums indicate on gold coins, gold and silver coins and bars?
Yeah, it's just, I mean, at this point, as the spot prices are running down as best as they can, what you really need to do is two things. You got to make sure whoever you're buying from is legit and proper. Okay, because there's a lot of scam and fraud. And I'm not trying to scare people away from physical bullion and this and that, but there is tons of fraud in this industry. The second thing is you got to find products that are, you know, proper and legit, that have decent hallmark, decent, you know, brand. I wouldn't buy just some random, you know, I wouldn't buy random things that aren't known and, you know, that you can't flip when the time comes. Because at some point, whether it's you or your kin, they're going to want to flip those products.
So what would be examples of that then? The distinction then between what silver maple leaf, silver eagle. So the average person or average bullion dealer can tell these things, know what these things look like, versus like a silver coin that's stamped with like a picture or logo that someone might like. So that's like subjective because another person's not going to like if it's a round made by a private bullion dealer, like with Star Wars or some type of like, I don't know, pop icon thing on it.
No, it's been insane the last decade or so. The silly private round market and like people flipping these rounds for premiums, et cetera, et cetera. In the long term, in the end game, it's all about the ounces versus the melt, you know, value. That's what matters. The premiums on this stuff. There might be occasional collector pieces here and there that are like, you know, that can be passed down generationally that actually have some value. But for the most part, that's marketing nonsense. You know.
Well, I'll tell you who gets screwed in all this. It's not the refiners, because the refiners are buying the doré bars from the miners at a pretty steep discount. It's the gold and silver miners, especially the silver miners. The silver miners are the ones getting screwed because right now their costs are still rising. And if silver drops another $1, $2, $3 an ounce, you're going to either have shotgun weddings, which is what I call forced mergers and acquisitions like Alexco. There's going to be others. We're going to have bankruptcies because capital is not available for a lot of these mining companies right now, especially the higher cost ones, the smaller producers. It's not available.
Yeah. Well, so if you look at the long-term chart of silver, like over 20, 30 years, you'll see these occasional like absolute spike and dives. Like 2008 was similar, where literally the spot price just keeps going down and you're like, what's happening? What's happening? I mean, we don't know because we're just like retail, you know, trying to do our best to do like investigative work on like, you know, the deeper level, what's happening. We can only kind of feel it. We can see it. But like chart wise, dude, this looks terrible. Okay. This looks GFC part deuce. And it does look that bad. I mean, but the thing about this is like they're going to have to respond and turn around and go infinite QE, right? And when the United States they're going to be the number one infinite QE because everybody needs US dollars because we create the most debt in the world, right? So
emerging, and well, also every time the dollar gets weak, like last year in 2021, you have these short-sighted, greedy emerging market, foreign governments, foreign corporations, right? And they say, oh, the dollar is weak. Oh, we're going to borrow more dollars. We're going to bet the dollars is going to get even weaker. And then the cycle turns. And then like a year later, 6 months, 8 months, 12 months later.
There's a coup in their country and they get killed. Yeah.
Well, that's like kind of like the knock-on effects, like the after effects of like a food and energy crisis. People, you know, poor people can afford the higher cost food and energy. Their currency is devalued against the dollar. You know, that's like the after effects. So all the crime increasing, pitchforks and torches, people like in Sri Lanka, they've surrounded what the presidential palace, that was a couple weeks ago. There's video of that. Now you have, it seems, James, you have protests. You're in Panama, right? So there's protests now in the streets in Panama over the cost of electricity, food, and energy. Now, how the costs are up so much.
Panama front. That's a real issue right now. Let me explain it. At least from what I've seen, I have not done a huge amount of investigating because I usually work inside my house, and I don't really, during the week, I don't do much traveling. I don't get in my car and drive around other than like to the grocery store locally, like very small driving. But the other day, all my buddies in my golf WhatsApp are sending videos about what's happening. And this past week, obviously the indigenous, I think it sounds like the indigenous in interior Cherokee, which is the province I live in Panama. They're bitching essentially about the prices are going up, our income's just not covering it, et cetera, et cetera. And so they just locked down the highway. And if you've ever been to Panama and driven through that highway, that highway stretch, by the way, is one of the most beautiful highway stretches of all time. It's smooth. It's recently been paved, and it's gorgeous. It's one of the best drives you've ever had. But they have a real gripe. And I'm not a socialist nonsense fool. You've got to know the history about the way this country has worked. The indigenous, they were here when Christopher Columbus came through, and they literally did not get touched because at the time the volcano near my house was blowing off, and so Columbus and his crew just went down to Panama City. And if you've ever been to Panama City, it literally is one of the oldest cities on this side of America in terms of world history. In terms of written world history, it's ancient. It's literally like the early 1500s. There's ruins all over that place. It blows away America in terms of its true history. And when you start to learn about the indigenous and what they are and who the way that they operate, they don't really think in terms of private property. They think in terms of tribes, in terms of their crew. They're not. It's just a different way of thinking. And the Spaniards who came here in the last 100 years or so made incredible, beautiful coffee farms, and they've done incredible things here. And don't get me wrong, but what they have done, what they have done in the last 100 years, I would say, from my experience, from what I've seen, is there's a huge problem between the way that they think about these people, the local people. They literally dehumanize them. They treat them like absolute trash. They pay them nothing, no money. Like I'm telling you, working all day, getting paid $15, $20, hardcore work, and barely making ends meet, living on fucking, floors that are literally dirt. The only reason they get away with it is because it doesn't get that cold here. And so they can get away with it. But I'm telling you, these indigenous are treated like trash.
Well, the politicians, they've been courting foreign capital, right? Because Panama, especially Panama City, is a major banking center.
Yeah. Yeah, no, it's ugly. I mean, it's always the same old thing. The banking center, the people who come in power, they rob, they steal as much as they can on their way through. And then they leave, and then the next party comes in claiming a whole bunch of stuff, and they rob and thieve. It's the same old thing. Democracy is the same stuff.
Hugo Chavez did give away some stuff, some higher living wages and some things to the poor people, but him and his buddies and the military, they stole as much as they could.
Oh, I mean, Panama, where they make the most money is the canal. Every literal boat that runs through there is $1 million plus.
Wow.
Every time a boat goes through that damn channel, it's over $1 million. So whoever has the money there, that's the ones who are making the money. Okay. Everything else is cursory, maybe short-term thieving, whatever.
Well, the main point we wanted to talk here, though, was like these emerging market countries. And it's not just Panama, it's not just Sri Lanka. We're seeing all these protest videos just in the last couple of weeks. I mean, we could go down a list. There's a lot of countries, and it's only going to get worse, James, the more the dollar rallies and the worse the food and energy crisis gets.
So at some point, the pain's going to get ridiculous. And, we're not there yet. It's probably coming this fall, the pivot. I don't think, we're July 20th. Like, this is a little early. Like, wow, I'm looking at the chart, like silver could bleed, mid 16s down to like low teens. It could. If this is GFC part dose,
we might have most of the silver miners then running at like pretty sizable losses then for a little bit, James. That might be nuts. People might be, if I don't know how people would be able to buy silver near spot then, because even probably like getting delivery of a COMEX contract is going to be a pain in the ass for all the extra costs.
No, it's not buying at spot. It's not happening. The only thing that people can do if they really, really are like, a bullion bull, you could go hide in like derivatives like PSLV. Like, that's the only one I'd go hide in, and then wait until things kind of return back to normal. Then arbitrage your money out of PSLV into bullion when the premiums are more reasonable. That's the only thing I would suggest. If you're literally like, don't be involved with miners. Don't be involved with other derivatives. Just PSLV for the moment, because I think it's literally selling at a discount. And same with Fizz. Both of those are nice places to hide if you got a pocket of money that you want to put into bullion. But wait until the premiums get back to normal, and that's going to be a year, in months at least.
Well, the royalty and streaming companies, James, if you go back and look at 2008, 2009, the silver miners, gold miners bear market in 2015, 2016, where costs were rising for miners, metals prices were falling enormously. There was no capital available for literally any miners, 2015, 2016. The larger royalty and streaming companies have done amazing deals that a couple of years later just like allow the company to grow enormously, cash flow growth, dividend growth. So historically, those are the companies that actually benefit, not the miners, like you said, from like metals prices getting smashed. So the miners will do what they have to do to survive, or some of the higher cost ones, the ones with too much debt. If they can't find someone to buy them, they're going to go bankrupt if you're right on your prediction with the silver price.
No, this could bounce very quickly. This literally could bounce by the end of summer. Like, I mean, looking at the chart and the way that silver actually operates in these types of waterfall declines, the bounce is usually quick within a month or two. So, like, don't delay. Like, if you're literally, if you're bullish, precious metals in terms of the longer term, this is your best bet. This is your best opportunity. This is literally your last shot, I think, between now and the future, where it goes absolute supernova chaos. This is going to be one of those dips that you've got to buy.
Well, if mining costs keep rising at this current pace, James, we're going to be looking at as a new price floor in the next like 3 to 5 years, $30, $35 an ounce silver. We're going to be looking at gold prices way above $2,000 an ounce. And we're already starting to see a lot of potential new mines either postponed, delayed, canceled. Unless the miner already has a lot of their 100% of their capital funded to build a mine. I mean, a lot of these banks now are slow playing. So you're going to start to see potential new mine projects that were supposed to come online the next couple of years. Those are going to be postponed, delayed, or canceled if metals prices don't rally in the near future.
So Jason, you're dead right. If you're listening to this, I would suggest you take a 30, 40 year look at the view of silver and the way it's traded. It's consolidated very strongly for the last few years. And this dip is going to rebound at some point. And then once we get over 30, man, look out. It's going to be an explosive event. I don't know what's going to take it there, but it's coming. It's not going to be a few years tops. We're going above 30. No matter what TAMP excuses Rostin Bingham uses, we're going over 30.
So if silver goes over 30, every $1 to an ounce that goes over 30, isn't that going to start to cause enormous margin calls and pain, potentially like bankruptcy, counterparty failure for some of these large bullion bank investment banks, and there may be secret bailouts needed?
If you look at the short positions right now of the major banks, there's a lot of people out there who literally make a living talking about this week to week. It's very slim. I mean, literally real slim. It really looks like it's going to become a situation when this final washout occurs, where we don't know who's long. We don't know, and we don't know what kind of moron would ever be short. I mean, given all the factors at play here, what kind of idiot, unless it's government sponsored, would be short of this.
Well, didn't JP Morgan inherited the silver short position from Bear Stearns when they bought them, right?
They did, and they almost got literally cleaned out. In 2011, it ran on them, and like they inherited the short position. They made massive amounts of currency when they inherited Bear Stearns from the spring of 2008 all the way to the drop, of silver to the end of the year before QE began. They made massive amounts of money. Like those guys who traded at JP Morgan, that beginning part, man, they cleaned clocks. They went from, 20 down to high eights. Do you know how much money you can make if you're leveraging that up and like making it happen on a day-to-day basis with waterfall declines and leverage?
Billions of dollars a month, right? Yeah, and then the traders who are doing these trades, they're pocketing 5-6 figure bonuses. Yeah,
exactly. This is the part we've not gotten to yet, but that stupid court trial that's going on in Chicago, it's the biggest. It's like the biggest whitewash of all time. You go read it. It's like, this guy spoofed a lot. He clicked a lot of buttons on the mouse. Like, come on, man. Like, can we get into the fact of how much money was made by ex-traders? How much stock options was vested? How much money is actually going to be like taken from these people if they end up in federal prison? I want to hear I want to hear about the absolute damage that was done by moving markets 10, 20 fold, hours on hours every day. Like they would just move markets by massive amounts every day. They did that.
Well, we're getting some truths out. So the prosecutor in the case has come out and said, look, if you look at all the evidence, and they have like tens of thousands of documents and all these recorded chat transcripts with the traders, they have emails back and forth between the managers in the trading desk and the employees telling them what to do, telling them like, don't do this, don't do that. I mean, there's
they knew it was criminal by 20, I'm not sure what year it was, but they literally knew they were involved with a criminal operation.
It was too profitable though. And I mean, the worst case scenario for most of the people at the bank, James, what is they pay a tiny slap on the wrist fine, not even 10% of the total profits.
Yeah. I mean, last week, like I said, Jason, I'm going to pump my YouTube channel again. I had to look because it's just so ridiculous. This stupid trial, it brings up so many scars and so much pain. From 2010 to now, when you literally look at the gold chart and you take the data that's outside of the COMEX New York, hours, like from 8 a.m. Eastern or whatever, it starts at 9 a.m. I don't know what hour it starts exactly, till 7-8 hours of COMEX hardcore trading, and then outside of the COMEX hours, right? If you start from 2010, the gold price was like $10.99 an ounce, almost $1,100 an ounce, right? That literally is where the basis of the data starts. And you look at the spot price across the last 12 years, plus 12 years and a half. Spot price is, $16.92. Okay, cool. Outside of COMEX hours, the spot price is almost $3,000. I'm not sure exactly what does that. I'm always confused by that. This is the price discovery mechanism. It's probably the most powerful one in the world. And we literally have a bisection, twice the price almost. In the West, it's half the price. What the hell is that?
Well, the question is then who benefits, who's profited from this? The bullion banks that have made enormous profits with shorting paper.
And the Western fiat government clown show. Absolutely fiat financializing every goddamn paper asset you ever thought of. That should have never gone to anywhere it went to.
Well, and then you also have large governments like China that have been able to clean out a lot of the physical gold from GLD. They've been able to hire the bullion. They've been able to hire the bullion bankers like JP Morgan and others to help get them large tonnage orders at a cheaper and cheaper price then.
Jason, in 2009, I know you remember this, Tim Geithner went over there in the summer and told them, hey, China, all good, like your assets are safe, whatever. Like, I don't know what stupid, I mean, like the amount of Chinese treasuries, it's like $1 trillion. It's nothing. $1 trillion ain't shit now. Like it's not much.
Well, now it's not. Yeah. But I mean, I think I think China was still buying treasuries up 2008, 9. And then the US was worried they would dump.
I'm pretty confident at that point. My point of bringing it up is that I think there was a tacit agreement at that moment between China and the United States where it said, look, it's cool to have your debt and all, but like, we're afraid that you're going to devalue your currency overnight. And so we got to make sure that we have what we have. So can you get us something else like gold? So I think tacit agreement was made. I'm not sure, if you look at the flows of physical gold, it literally in China, it was like the most transparent and obvious thing. 2009, 2010, 2011, 2012, 2013, especially when the price dip happened. Holy crap, China, they were buying massive amounts of gold. So, when it comes down to the numbers of it all.
Well, I mean, China buys every time the price gets smashed for gold, right? China buys more. There's a new article out on Kitco today on Wednesday, July 20th, that China is now buying even more tonnage on this paper price smash in gold. So
same with India. It's the same thing. Like that is one thing for gold people who maybe don't understand how the market works. Like the paper kind of runs the spot price, but once the spot price gets stupid, the physical kind of overwhelms it. And then you have a rush back toward who's short, and then the spot price kind of reverts.
The physical demand also, if it increases substantially, it puts in bottoms in the paper price. And so eventually does mining supply costs, because a lot of these markets, especially silver, are so tight that if a lot of mining supply were to come offline, there just wouldn't be. So as much as there is paper price smashes and a lot of paper gold, paper silver that's sold, there's still metal needed. People, especially for silver and industrial users, governments and central banks want gold and tonnage. There still has to be metal delivered at the end of the day.
Yeah. I agree with your take that, having royalty guys, like I think royalty guys in the play and then bullion, those are your two bets. I would not bet on a mine. I would suggest in this day and age, you deal with combination of bullion that and you have in your own hand, maybe with Loomis or Brinks, people you can trust directly, and maybe like a royalty or like Sandstorm, like that you talk about constantly, on a pretty regular basis, Sandstorm, Gold, or places where there's royalties that are jurisdictionally right, because man, things are going to get really bad, Jason. I mean, you already have in Mexico, I've seen the last few years, the cartels are literally robbing mines directly. They're going in there and robbing them point blank.
How's that different? How's that different than a government increasing tax? Well, it's they're actually sending people with guns there to steal the metal. Then when the government's saying, "Oh, we're increasing the taxes," I mean, it's still robbery. It's just one of them's armed robbery with a gun in your face.
They're both happening, and they're both going to keep happening in a worse way. And imagine too if what we think, I think. At least myself, I won't talk for you. I think eventually gold and silver run up walls. We go into a mania eventually. I'm not sure how many years this is going to take. It's going to be a while because it's such a political thing. Like geopolitically and all the technology involved, the CBDC systems coming on board. I think it's going to be a while. Get settled in. This is going to take a decade at least.
I also think Sprott Inc. is safe because they own the metals trust. So they have all those metals trusts there. And there's going to be increasing demand for those for institutional investors who want safer storage of their metals. So long-term Sprott, they focus on free cash flow and paying out a dividend. So it's not anything that you're going to get crazy leverage on where you time the market perfectly. You buy silver miner, the silver miner survives, silver prices go up and you make 1,000% or 10, 20, 30 extra money. But Sprott Inc. is a safer company and they have 5 or 6, I think, different now physical bullion trusts.
Yeah. For every story about your 100x, 10, 20x miner play, there are literally 10,000 losers. I mean, I'm a loser.
Yeah,
I'm a loser. I had money in, Polyus or whatever, one of the biggest Russian gold miners in the world. And this past year, see you later, money. Sorry, they don't trade anymore. Your unsecured mining shares are worth nothing. See you later, dude.
Yeah, I had a bunch of buddies go in and try to buy the Russian oil and natural gas companies, and they thought that they were buying assets for like 10, 20 cents on the dollar. And then because you're an American, your shares are frozen. They're locked. So,
people don't understand the daisy chain of law, right? Of who owns what.
Well, this is the thing with governments and geopolitics. I mean, they could change private property laws. They could change the rules. I mean, the average person doesn't want to think about this. They want something easy, set it and forget it. And that's just, we're not in that environment now.
All right, that's over with. Those days are done.
Well, look at all the rules change. Every time there's the asset prices fall, there's a financial crisis. Look at all the rules changes the U.S. federal government, the U.S. Treasury, the Federal Reserve Bank need to do just to keep things from totally collapsing.
Yeah. I mean, literally, we're like in when you walk into a circus and there's some clown like over there, like juggling a whole bunch of things. It's just literally that's where we are. I mean, we all know this. Psychologically, we have to deal with this. This is terrible. Like you go online, constantly getting bombarded by all types of propaganda.
I would actually pay to see. I would actually pay to see Jerome Powell and Janet Yellen in a clown suit. Actually.
Well, I'll tell you, Jason. Historically, long term, that's where they are. I mean, there's absolutely no way they're getting out of this. Like their legacies are going to be absolute mud.
Oh, I don't think they care about that. I think they're both making enormous amounts of money with their insider trading and like 6-figure consulting fees.
That's fine. I mean, like Paul Volcker got away with it, but he's absolute trash too. I mean, like it's amazing to me that guy, he literally like built the fiat USD and the milkshake theory, the way that it works.
Well, Volcker wasn't all bad. I mean, he did save the dollar. So he did raise interest rates. He did save that. He bought the U.S. a couple decades. So, I mean, he wasn't yet, but didn't he say in his memoirs that he wishes he had manipulated the gold price so gold didn't go.
Yes. And gold was the enemy. Every day he'd walk into his office and be like, what's the gold price? Like freaking out, literally freaking out because the gold price was blasting to a place where, we could have gone back on a gold standard for a year or two.
Well, I think Greenspan admitted, sorry to interrupt you. I think Greenspan admitted that he was checking the gold price too, but I don't think Bernanke and Yellen care about that.
Yeah, I think Yellen, if you probably interviewed her or Bernanke, he'd lie to you, pretend like it's not big or important. And Yellen would probably lie to you too. But they both know if gold's going up the wall, they're effed. Like literally their reputation's done. So they'll try and get out of the way before it happens, I would think.
Well,
legacy-wise.
Well, here's actually the one scenario where they might actually allow it to go up is like a deflationary collapse. So if the Fed tries a bunch of stuff and there's still deflation, there's still defaults, there's still bankruptcies, the dollar is still rallying, emerging markets are collapsing, right? If there's full on deflationary bust, then you get to like a Federal Reserve Bank, U.S. Treasury, nuclear option scenario. And obviously they don't want to do this because it makes the gold price look good. But the FDR had to do this in 1934 where they devalue the dollar against gold. Now, I don't think we're there yet. We might be years away. But at some point, if things do get bad enough, if there is temporary deflation, they might have to do something like that.
Jason, I'm in agreement. And it's been a long time. We've talked about this like in the mid 2010s. I believe PIMCO had a publication about Rumpelstiltskin at the Fed, something along those lines, where they talked about, you remember it. Yeah, where they talked about, hey, we might need to make gold $5,000 and have the Federal Reserve buy private gold in the United States, et cetera, et cetera. Like
Jim Rickards wrote the book, The New Case for Gold, about this, where if that does happen, then the Fed just starts buying gold and then defends like a $5,000 gold price. So if gold goes below 5,000, then the Fed buys more gold. And if it goes above, then the Fed says they'll sell gold.
Yeah. So yes, I agree that literally could become the future with the CBDC crust, right? I mean, there are going to be lies. There's going to be a bunch of fakery around the entire thing. Like, even if there is some fake gold lacing in the all be all, it's going to be a fraud. The bottom line is the United States is greedy and it's run by greedy pricks in general. Okay. I'm sorry to be as blunt and as obvious as this, but that's just the way it is.
Oh, you're being kind. I'm here in the DC metro area. There's a lot worse adjectives I would use.
So they're going to want to do inside shenanigans and take care of themselves and print money for free and, have their kin never work, et cetera, et cetera. So
cancel on effect. And anytime there's a new government spending program for the elites here in the DC metro area and their corporate lobbyists and those guys, it just means more that they can steal or siphon off.
Maybe listeners think we're crazy, but if you ever lived in any of these major metropolitan areas where literally there's like third or fourth generation idiots who have been siphoning off of, whatever. These are just people who get over because the system has given them a whole bunch in their whole lives. I mean, you literally have adult retards who have millions of dollars and you have a conversation with them and you cannot believe these people are wealthy.
So DC is the worst because there's more lawyers here. We have, other than I think New York City, we have the largest amount of people with law degrees per capita of any major metro area, but also because you have Congress here. And so you have Congress has the power of the purse. They still allocate an enormous amount of funds. And then you have all these Republican and Democrat congressmen, their aides, lobbyists, and everyone's looking to get rich quick or get richer and make extra money. So everyone's either selling information that should not be sold because of top secret security clearances, or they're trading on inside information, or they're selling it to a hedge fund manager.
Or they're just literally cooked and they got, hired by their local, cooked county that they're in. There are kooks that are Congress people. Like they get in because they strike a nerve or what have you. I worry the hell out about the United States. I just think that we're in a horrible place in terms of where our values are and where we're headed. It's really ugly.
All these governments are doing a bad job. The food and energy policies, all these governments for a long time now have been atrocious. Look what's happening with the energy crisis in Europe. China is a mess now with the bank problems, their real estate. They also have to import enormous amounts of food and energy. And then emerging markets are getting killed because of high food and energy prices and the dollar. So they're all these governments, it's all happening kind of the perfect storm because of food and energy and then the rising dollar and the dollar denominated debt. But we are going to have a rally. I think it's on the supply side, James, because of the costs are rising the supply side. I mean, demand for food, energy, a lot of these other, for silver, for industrial, also for investor demand, central banks want gold. I mean, at some point, if the miners can't produce the metal at a profit, we're going to have even worse supply problems soon.
Oh, Jason, I don't want to be like Senor Pumpster that you bring on to your channel or whatever, but like, this is literally the moment where you bang the table.
I'm going to get
my dog got annoyed.
How dare you let him? Oh, now your dog's barking because of the loud sound.
Relax, say. My dog got annoyed.
Yeah, you spooked your dog.
I'm not kidding you. Like, I'm looking at the chart. Say,
you banged the table and now you spooked your dog.
It's okay.
And now we're going to have trolls in the comment section. How dare you not edit that?
Hey, knock it off. Knock it off. He's doing. Hey, he's doing his job. But like, I'm looking at a long-term chart that goes from 2008 until now, 2022. And literally, we're running back to this massive support level that runs around the mid, high teens. This is, and if you look at the past, these things always revert and go crazy to follow. And the consolidation that's happened in the last few years, like this could literally bounce and and go further. Like this could be the run that goes beyond 30, that goes to 50 within the next year to two. If you look at this price chart, I mean, it's insane the way it's painted.
Yeah, the other good thing for the supply side is so much capital now for the miners is not available. So you're not going to see, other than maybe a Silvercrest Metals out of Mexico, which is a very low cost, high grade silver mine, there's going to be very few new projects coming online. So there's not going to be a bunch of excess because we've had
it's over, Jason. I mean, I've looked already like at the supply side. Like, are you kidding me? Like Switzerland and Turkey had to come in to make enough silver bullion bars so like stackers could buy enough silver. Like Switzerland, all they do is gold. The only reason they got involved with silver lately is because the premiums got jacked out.
Oh, that's interesting. I didn't know. You would know that more than me. Yeah, I mean, normally they have recast
absolutely no interest in silver because there's usually not any money in silver.
Gold's way bigger money. Yeah.
Yeah, I mean, in volume terms, and that's why they only do gold. But no,
selling those recast 4.9 kilobars into China.
That's changed, Jason. It's changed a lot. Turkey now and Switzerland are both like big time silver bullion bar makers since COVID 2020. They both are, massively dealing in terms of delivering for, silver bullion stackers in the United States. Like, let people have to know this in terms of silver investing and being into silver. The United States is numero uno. Like, we are literally number one. I mean, India has a lot of silver, jewelry, this and that, but it's not even close in terms of like the supply and demand numbers. Like, the United States is absolutely silver rabid. And it's good because the bottom line is there's tons of money in the United States. So there's a massive market and it will not stop. It will not stop. There's no chance this stops. This is absolutely politically driven. It's literally part of the fabric of the United States. Like, the silver thing is not going to stop. It's only going to get wilder as time goes on. So, yeah.
I mean, yeah, the U.S. has had the silver dollar prior to what the 1970s. The U.S. had the silver dollar for silver certificate, silver dollar for a very, very long time.
This is not going to stop. The silver bug is embedded in our subconscious, and it's embedded in our internet, the way that people are now. So buy on the dip, mate. That's the point.
But just don't expect $50 silver, say, in 6 months, 12 months, a year. I mean, you have to take like a long-term view of things.
Let's take a long-term view on this, Steve. I mean, I'm looking at the long-term chart, right? And like,
I also don't buy metal to get rich either. So
no, this is savings. This is the savings that you put away because you have negative and zero interest rates. Okay, there's absolutely no money in keeping it in bankrupt banks. Okay,
well, and on top of that, James, you also have these governments that have 15-20% inflation numbers annually, and they're lying about it. So your savings, the purchasing power is being destroyed too.
And Jason, they're rigging the spot prices. Like, they literally are crashing the spot prices to deceive you into thinking that this is a terrible investment.
Well, recently things have been so dire and desperate for these governments, James, that they weren't just manipulating gold and silver. I heard from a DC insider the Fed was selling oil futures contracts the last couple weeks to try to smash the oil price. So they've been trying to smash all the commodity prices and especially oil price lately too.
Yeah. Jason, I think we've maybe talked about it a couple times in our lifetime, where we've talked probably a handful of times. But when it comes to the CME group and the COMEX, they literally have this thing that it's for foreign central bankers, and it's called the CBIP program. It's the Central Bank Incentive Program, and it's the Foreign Central Bank Incentive Program. If you're qualified foreign central bank, you can use a proxy commercial desk as your middleman. It doesn't matter, but you'll get discounts on high volume trading.
I wish we were joking. I'm laughing at how messed up it is. I wish we were joking. It's true though.
And this has been a fact since 2013. This is not me just making this crap up. Like, these documented facts. I can pull it up on Twitter. If anyone has questions, just come to me at James Henry Ann. I'll send you these are facts. They've been running for almost a decade.
And then lately, before we wrap up here, because we're almost an hour now, up here, I want to get your thoughts on Peter Hambro's comment. So his family, if you're not familiar, longtime London bankers, longtime in bullion banks and precious metal trading. And he even recently made comments talking about precious metal market manipulation. So I was surprised to see those.
Yeah, no, I reached out to Peter, actually. I did not know who he was. And when I read, it was like 1,000-word essay about what a rig job London is. And, I'm sure he enjoyed his bonuses, for those years. He kind of laughed and mocked it. But the bottom line is, it's been a rig job pretty much since 1980. Like, that entire fiat currency explosion The fiat financialization that happened ever since, it's over. Those days are done. Okay. So we get to deal with the repercussions of that. It's going to be ugly. And, you know, obviously I'm not cheering on bad things, but ultimately, when it's all said and done, it's better to have a clean market without fraud. And so hopefully we can we can come back to terms in the next few decades as human beings and rout out the fraudsters. Like that's going to be it's a huge challenge. And don't get me wrong.
People aren't going to be going to prison for that type of fraud, unfortunately, though. So hopefully at some point, I mean, there will be supply. The more they manipulate, they cannot do it indefinitely because then mining costs rise, miners go bankrupt. So that's why,
Jason, it's their exit valve ultimately, like we discussed. Gold is the exit valve. Like it's the last bubble of this entire World War II post-debt cycle, super cycle.
Well, we also have a lot of trolls repeating below the video that the manipulation's never going to end. Well, if it was 100% successful, you would never see gold above 1,000. You would never see silver above 15. And in the real world, with supply problems, mining companies, capitals are not available. Mining grades for silver grade, gold grades are falling so much, and then costs for these mining companies are rising. It's just not feasible for a lot of these mining companies to produce.
I'm sorry that you attract these trolls. What a bunch of losers. Like, are you kidding me?
It's the internet, man.
Have you done any fundamental research? Are you fucking kidding me?
Unless you're handing these people out free winning stock picks daily, people are going to complain.
No,
so that's just how.
Have you done any fundamental research about the monetary base, about what's happened in the last decade or two, about what's happened in past history when you do this to the monetary base? How dare you come on here and talk S? It's ridiculous.
Well, let's just talk. We could just talk. It would take too long on the show to go in depth. But I mean, if you because the news story on Kitco just in the last week or so, South Africa. I mean, South Africa at one point, James, was the top gold mining country in the entire world. I mean, they were producing by leaps and bounds the most gold. The grades were enormous. Now they're going like enormously underground. The grades, because they were the top producing gold country for over 100 years, the gold grades in South Africa have totally collapsed. You've had anti-mining policy by politicians and bureaucrats in that country. So all these factors, I mean, like
Jason, they have mining shafts that go over 2 miles underground. There's no mining shaft in the world that's longer than the one South Africa created.
Yeah, and that's not the easy gold. Yeah.
Yeah, and they have tons of wildcat miners because those people are literally like, they have nothing else. Like Vice News has done tons of documentaries. You can go look it up on YouTube. If you really want to see pain, go find a wildcat miner in South Africa. Mate, this is some of the worst. This is some of the worst mining that you could ever think of. You're literally in dark tunnels getting high every day just to escape the nonsense.
And they're using mercury and arsenic and other poison, right, to separate the gold. So they're literally poisoning themselves.
Yeah, it's absolute awfulness. I mean, look, gold has tons of awful sides, okay? But here's the other thing. Fiat currency is absolutely worse. When it comes to actually depredation of the economy, of the world, of what we're doing, about how ridiculous we're living above our means. Fiat currency is the thing that creates that. Gold has a few this and that, but it's not. I'm not saying that we have to go back on a gold standard. I'm just saying we have to go back on a standard where you just can't put a bunch of numbers into a keyboard by some jackass who just went on 60 Minutes and told you that.
And also, James, to add to your points there, the longer fiat currencies are used, the more they destroy honest and hardworking people, honest and hardworking savers, honest and hardworking small business owners. They get wiped out with fiat currencies.
Psychologically, they've already ruined like 5% of the population. And once you get to a certain situation where there's 25% of the population that literally doesn't believe in you and your institutions or your lies, it's over. You literally can go into hyperinflation zone. So,
well, you've also created a nation of like gamblers and speculators because they think that the Fed is going to inflate asset prices. So you have these younger adult millennials, and they took out tens of thousands or $100,000 loans from Coinbase or a Robinhood app to go and gamble on altcoins or stock options.
It's an absolute disgrace. you watch any sports event, like they're trying to tell you, like, yeah, you should gamble this or that. Like, what kind of loser gambles? Like the damn tables are set for you to lose, loser. Why would you engage? Loser. I don't engage in any trade unless I have an inside like curve. Like, are you kidding me? Like, what kind of moron thinks they have an edge? He's stupid. I mean,
well, I think a small amount of speculation in your portfolio is healthy, but I think what has happened though is you've created a pervasive culture of gambling, a pervasive culture of speculation where people call themselves investors, but they've leveraged everything they own for gambles on altcoins and all these other things.
You're right, Jason. I mean, this is literally like Weimar Germany, where it's like everything is a speculation, and it's been that way for a while now. I mean, that's awful. That's awful.
And it seems like every time we have some type of correction or crash and a bust, the Fed just comes in, papers over, changes the rules, and they try to reinflate the asset prices. We got to the everything bubble where all these asset prices were inflated. I'm not really sure what their next. Well, we're not quite close to the. I don't know if it's the end game yet for the U.S., but it's looking real bad for the European Union, Japan, emerging markets. Those may go for China. It may go first.
We have so much time left. It's insane. But the point being is like, and I'm looking at this long-term chart of silver, for instance, and I'm looking at the 2008 GFC rebound, from above 20 to, now to high eights, and then rebounding above 20 and then going up a wall of 50. Now we're sitting at, almost 30 down to, mid, high teens, 18s right now. If that thing bounces and does a similar act that it did in 2008, you got a three bagger. You got silver running to 100, essentially. When that, Jason, I don't think is the absolute mania. I think that's like the first step into the mania. I think the mania goes up multiple hundreds. I think ultimately, politically, unless things change, I think we go into hundreds of dollars per ounce on silver. Like, well, that's how ugly it's going to get.
So, James, if we have $150, $200, $250 a barrel oil, we have diesel prices that are still rapidly rising 5 or 10 years from now because these politicians will not allow, I would say, common sense energy policies that actually allow the producers of the energy to increase supply to meet demand to lower price. I mean, the mining costs for gold, silver, copper, I mean, we could be looking at mining costs of $30, $40, $50 an ounce just to mine an ounce of silver in the future. For gold, we could be looking at way over $2,000 an ounce to mine gold if energy costs keep rising.
I agree. The question of next decade is a combination of a few things. Is like combination of obviously the way the energy runs. Another question is like the health of human beings after that vaccine trial. I have no idea in the next decade or two what really happens in terms of humanity, in terms of global population. That's been a wild ass, experiment. I don't know, ultimately what comes out of that.
Well, I mean, like the policies that Klaus and Bill Gates and his other bond villain group,
they're the worst. They're eugenicist scum.
Well, they're coming out with even more what they want to reduce the amount of food supply available, and then they want to buy up the farmland. And then they want to seed bugs, apparently.
I can't wait to have a bug pizza with you, Jason, in Washington, D.C.
No, thank
surrounded by sex parties and all types of degenerate nonsense. It sounds like a good time.
Yeah, no thanks. Well, hopefully people realize that you're kidding, James.
Yeah, I would hope.
Well, I want to thank you so much for your time today, James. You do excellent weekly videos on the precious metal market stories. I think they're all under 20 minutes on the SD Bullion channel. I said Silver Doctors earlier. So SD Bullion channel. Tell my listeners how to follow you on Twitter and your YouTube channel.
Sure. YouTube, just look up SD Bullion. That's our channel. And every week I put out on Fridays, typically an SD Bullion market update. Occasionally I'll come with, random things during the week, but it's been so slow of late, news-wise. I mean, the price has obviously been falling. I probably need to pick it up, but at least bare minimum, if you subscribe, you'll get one update a week. And then on Twitter, at James Henry Ann is my handle. And I'm pretty no nonsense on Twitter. I kind of stick to precious metals. I don't think you should follow me if you're looking for anything else. I try not to be a clown, essentially.
Jokes aside that you made throughout the last hour on here. might have to edit out your dog barking like crazy after you pounded the table there.
That was funny. I've had multiple animal nonsense on my interviews, and Saint, that's his first time. Got to give it up to him.
I think you spooked him with the loud noises, but thank you so much for your time. And what's happening with gold and silver right now, a lot of it, especially with the capital available for miners, the rising costs, we don't have the Q2 earnings numbers out yet. They're coming out, I think, like the first 2 weeks of August. They're going to be ugly for a lot of these mining companies. I mean, the Q2, the costs for the miners are going to be ugly. So you're in an environment where the paper prices are still trending down. The costs are still going up. There's going to be forced mergers and acquisitions for the miners. The royalty companies, though, the larger ones, they have tons of free cash flow, profit margins, and there's like an acquisition boom that's happening right now.
So, Jason, it's always been the same. Don't be leveraged. Don't be stupid. This is a long-term bet, and it takes decades to play out. So relax and do it slowly.